Hey folks, we had a great morning in the first hour trading pit and in the war room. Everything's been going exactly as expected. Apple. So Apple yesterday, everybody thought, these earnings are going to be a disaster. These earnings are going to be, how badly are they going to disappoint? They didn't disappoint at all, and it really fueled a big rally first thing in the morning. Let's take a look at first off the triple Qs. Then let's look at our gap trades this morning and the trade in Apple, and then let's finish up by looking at the strategy for the afternoon. Got a bunch of stuff to get through. Here it is. You've got your QQQs. This has been pretty straightforward today. So we had a big gap to the upside. You got a very high probability when this happens that you're going to get a move back down below this R2 level. About 77% of the time it follows through. Today it did not. So we did get the reversion. So if we had the morning gap in the Qs and we played it by the numbers, played it according to our opening gap strategy, then what you had here was a very clean sort of 1, 2, 3 kind of a setup. And then once we got through those levels, then the trade of the morning would have been to trade back down through here. Now we had so many gaps on our list this morning that that did not wind up being one of the trades that we took, because we had upward of 20 things that we were looking at. We wound up taking far fewer. We had let's see, SQ, BFAM, LYV, FLR, W, right? Those were all trades that wound up triggering for us, even though we had a list of, I think it's about 25 or 30 stocks that we were looking at. So filtering through those stocks is a big part of what we do in the morning. I'm going to show you what we did, how we handled Apple, and then maybe we can get into one of the gaps and talk about that and get everybody ready for next week. So let's go and let's focus first on our Apple trade here and just show you that we did this sort of counterintuitively for what some people do in terms of their trading. We looked at a boot camp trip. So this is a trick that we learned at the boot camp, and it's really something that Julie and I have been trading for many, many years. But we're looking at the pre-market. And when we see a threshold level like this in the pre-market, that tells us that the first inflection at that threshold, that's probably going to be significant. And for those of you who have been through the training and everything, you know why, you know what we're looking for exactly in terms of that's a very long conversation in terms of why it works. But on the opening bell, what we talked about in the room this morning was, well, if we get a pop on that opening bell and we get a reversal back down to this threshold level, then what we're going to look for is a repeat performance of the move higher. And where are we going to look to cap the price action? Well, it was going to be right in here. So between those two levels, between 183.87 on the entry, 184.81 on the exit for a profit, that was the first trade of the day. So with that under our belt, right, the next thing that we did was moved on to our opening gap trades. I'm going to show you just one of these. It's in the bottom right corner of your screen here, this guy down at the bottom. This is our trade in Block Incorporated this morning. So Block gaps higher, and this move is 2 standard deviations of volatility. So this is my algorithm trade. This is the trade that I sort of made famous here over the years. More people have heard me talk about Baltimore Chop, which is what this trade's called, than probably anything else. And it's because it's a doozy. So this trade, when it's 2 standard deviations of volatility, we're using a volatility measure here to get out into the 95% probability tails of the distribution. So you've got a 95% confidence interval of the mean, it's called. And all that says is, look, once we gapped up here, you had a very, very high probability that you were going to make a move back down in this direction. And if you want to watch one of the recordings on this that I've done over the years, you can just send me an email, adrian@traderinsight.com, and I'll be happy to get you a link to the recording so you can just really go over the strategy and see what it is exactly that I'm talking about. But again, right, this is this 1, 2, 3 kind of a stair-step thing higher. It doesn't matter that there's more than 3 lows that we're following. We're just following up, and we are getting into position so that what we're going to do in this case is when the stock gets up and makes that highest highest low price that it's going to make, which is right there where I just drew that blue line. We're going to look to short the stock, and in this case, we're going to short right back down into the low of the first couple bars of trading. The reason for that is after it got into those lows, it took off and it started heading higher. And that tells us that right there is where the buying pressure was in the morning. So first thing in the morning, it gaps up. These are where the sellers are hitting it, gets down to here. This is where the buyers are coming back in. Then we've got a profit objective in place. We know that if it goes and hits the profit target, we're going to get out of the trade. And then we're just going to set a stop just up above these threshold levels initially, and then start pulling that down as this trade starts moving in our favor. So initially the stop's a little bit wider than it will be as the trade develops. And usually this gives you, some time to fiddle with it. But in this case, we had the next bar here traded down through the entry price, went straight down to the profit target, and then just kept on going. And as you know, I am a big advocate of, if it keeps on going, there is no coulda, woulda, shoulda. What you need to do is just look at it and say, I traded my plan. I did exactly what I said I was going to do. That is a measure of success. Doesn't matter that we pulled $1.20 out of the market and then the market kept on going for multiple dollars. What you're doing is setting these up and moving on to the next one. And again, this morning we were in 1, 2, 3, 4, 5, 6 of these. So you don't really have a lot of time to sit there and wonder if you could pull another penny out of this, how would you do it? For the rest of what we're doing, very similar to what was happening with the triple Qs. Triple Qs are very constrained right now. So they are trading in the box. They're going sideways. And if we want to hop back to those for a second here, we can, and just sort of talk about the afternoon. You can see that we've got here a very nice box that we're trading in. And that represents pretty much the value line at the top of the range for the day-to-day. You can see that it's also representing a giant chunk of the volume distribution that we're seeing over the course of the session. So there's a lot going on in there. And what we've been doing in the room for the last couple of hours is just focusing on these guys right here, right? So when it impacts the bottom of the line, looking to get up to that top line again. So 434.82 all the way up here, in this case to 435.61. And on the futures side of it, of course, we're just using the QQQs to trigger the futures trades. Then we've got on the Magnificent Seven some opportunities in a couple of these stocks that make some sense. We've got Tesla, and Tesla is pretty bidirectional today. So if you are looking at this, you can see there are support and resistance opportunities. We drew these lines first thing in the morning today. So the lines have been there since about 10 a.m. Eastern time, and you can see that we're getting into these ranges, and it's really constraining price action nicely. So bottom of the channel, top of the channel, those inflections are good for longs and shorts. At least for me, they have been. And in the case of other stocks like NVIDIA, we are just looking at the long side of the market. So we've had, again, all of these support and resistance levels in place for several hours now, and it's finally getting into these channels where when it impacts down here at 883, 33, 80, 35, something like that. Again, don't focus on the minutia. It doesn't have to be to the penny when these lines get touched, but that's good for a trade up to 887.27. Again, you don't have to take 1,000 shares of something to be trading it. You could just take 20 shares, 50 shares of NVIDIA. If the price is intimidating, you're not out there looking for a stock that's trading at 10 or 15 cents per share and taking 50,000 shares of it. You're looking for a stock that's trading in very predictable bands. And when you see those bands form, just scale the share size down to something that's comfortable and makes sense for the way that you're trading. Always be in a position to be comfortable with the risk that you're accepting in your business. Then we've also got Meta. You can see here Meta is trading also in the box down below our R2 pivot, and that travel range up to the pivot 449.89 up to 450.98. So again, nice range on the stock and a very defined area that it's trading in. We thought we were going to see Netflix firm up. I thought for sure that this level that we looked at earlier in the morning, this hard resistance that really, at that time, the volume by price histogram there was pretty perfect, and said if price gets up here again, it was going to reverse, and if price got up above there, it was going to be hard support, and it really hasn't been. I'm waiting for this guy right here to firm up and tell me sort of what's going to happen over the rest of the day to see if there is an opportunity to be had. All right, so focus on the trend, obviously. Focus on where the stock is relative to where it was earlier in the session. Stay focused on those volume by price histograms. Stay focused on the anchored VWAP. Stay focused on where we are in relation to the session VWAP. And with all those things in place, I think you are in good position probably to get in front of a bunch more opportunities before the bell today. So if you thought I was kidding, I will show you here. This is the list of the gaps. This is Julie's gouge sheet from this morning of the opening gaps. You can see here the ones that are sort of circled in yellow highlighter. Those are all the ones that we were considering after the opening bell. So if you're in the first hour trading pit with us and you hear us saying we're going to pare this list down, it's because that's too much, right? You can't trade all of these. We've got a couple guys who trade these with an alg, right? They've gone and done an algorithm around this so they can take them all. I don't really advise that. What I say you should do is just go in there, look for stocks that you've traded before, look for stocks that you understand the rhythm, you understand the price action. In our case, that got us down to a list of about 8 or 9, and from those 8 or 9 in the room, we had a live call on 6 of them. So that's all you need for the morning. Good chunk of the folks took the rest of the day off, which is probably a really good habit to get into, right? Just use this for what it is. You want to have a lifestyle. This is about making extra money. If you're going to sit here and grind it out all day, it's a job, which is great. That's definitely what we do, but just understand the difference between the two. All right, you guys have a great weekend. We are going to go see Tom Papa tonight. Great comedian. If you're in LA, he's playing tonight. If you can't see it live, then get on Netflix and watch some of his specials. He's a funny guy, and it's important to laugh. Okay, so have a great weekend, and I will see everybody back here next week.